Okay, today we discuss OBYC, which is FIMM integration. And if we talk about the integration part, this is the integral and fundamental T code, OBYC. And in this OBYC, we have various scenarios that we have to configure for FIMM integration. Okay. First of all, we need GRIR account, raw material account, which is your stock account or asset account, which means it is a balance sheet item. GRIR account, this is auxiliary and open item account. By open item, I mean we have to reconcile it and we knock it out. We knock off the values at month and year end. Okay. And after GRIR account, we have raw material consumption. Okay. In the same way, the same is applicable for semi-finished goods. Okay. Semi-finished goods and semi-finished goods. Okay. So consumption is basically your expense. This is your expense. This is your balance sheet asset item. Both this will be absorbed, which means it cannot be carried forward. This will be carried forward with opening balance and closing balance. Okay. And closing balance. This is for inventory account. And this is for GRI. Now, for the GRIR, we have now if you talk about GRIR account, so I was talking about GRIR account. Why do we need it? Because we actually accept goods, good receipt. Okay, and we have an invoice receipt, which is from the vendor. We get the goods from the vendor and the invoice, but there is always a difference in dates and values. The delivery date and the receiving GRN date can be different and the values will be different. Why? Because values will also have elements like returns, damages, over delivery, under delivery, and freight, taxes, and so on, right? Okay, invoice value at the time of payment will be different because, for example, if you ordered $1,000 goods were ordered of 100 items, we received 97 because 3 were lost, and out of 97, 3 were broken, and 3 were of low quality. So returns will be booked through debit memo. Okay, return, which is Myro, the T code, Myro. Okay. And when the goods are going through QA testing, after the QA is passed, then we pass the GRN, which is the accounting entries. And accounting entries are debit. Let's say this was for 97 pieces. Now it will be, for example, $910. So $10 is your returns to book PO of $1,000. Yeah. Sorry. No, what am I doing? 91, 97. Yeah, 91 and 10. Returns, sorry, returns will be 10 items returned. Okay. 10 items returned. So that will be a return of $100 almost. Okay. $100. Let's say this was 4 items were broken, 90, and now these are 90 pieces and 10 items for $100. And now there is a difference of $100 now. Although your invoice